Neela, this is, I mean, a number that shocked pretty much everybody. Is the jobs market really this strong, or are there some anomalies in the reading?
Yeah, it's incredibly strong, Matt. This number is based on 26 million workers in the private sector. It's a private sector look. It's one indicator in a handful that came out today that shows that underlying what we're seeing in June is incredible strength. But the caveat is it's incredibly fragmented. When you broke down the numbers just a few minutes ago, what you saw is that consumer-facing industries led the in terms of hiring. I can also add to that 60% of the hiring was done by small firms, firms with less than 50 employees, the ones that don't show up in the S&P 500 index. That's where we're seeing the job gains. Those larger firms have largely retreated from hiring. Small firms are picking up the slack. So consumer-facing, small firms, that's what's driving the labor market right now.
And I guess good news for the economy, bad news for the stock market, right? Because that could push the Fed to raise rates even higher. Neela, have those higher rates not had any impact on these smaller firms? Aren't they concerned about, a 5.5% Fed funds rate?
Certainly, higher interest rates affects borrowing costs on Main Street, from small mom and pops to consumers. And we're seeing that in our data in terms of the manufacturers. That's really taken a hit. They've been shedding jobs for the last several months. Also, B2B businesses aren't faring very well. So information, professional business services like accountants, those jobs are not returning or rebounding. It's really those people-to-people jobs, healthcare, education, retail. Consumers still want to travel, still want to take vacations. Those jobs are seeing strength.
One of the things we have constantly heard is that the jobs market, while robust based on this data, is a lagging indicator. And getting back to the market trying to interpret where interest rates go from here, a lot of people wondering what the inflation picture is going to look like. We just ran some sound from David Rosenberg, who feels like deflation is what we should be worried about as opposed to inflation going forward. What do you see when you look at the inflation picture right now?
I think of wages as the bridge between the labor market and the inflation picture. And what we've seen is that wage acceleration is coming down. Despite that tremendous job growth in consumer-facing service sector jobs, every one of those sectors I named saw a deceleration in pay gains. So that's good news for people who are concerned about inflation, who are concerned about the wage price spiral. It's not looking like that is materializing. The cost of more job gains is not higher inflation, at least if you look at our numbers based on millions of workers across the country. So we're not seeing a recession in the labor market. We're also not seeing a stoke up in inflation.